Hello Sky Traders, welcome back to a new video. Yes, we're trying to make up the time that we were not active so much on YouTube, so let's get started without further ado. Today we're gonna do like a sort of recap on the gold dollar, and again, it's not like a regular recap. What we're trying to do is build some concepts that we're gonna use whenever we check, chart, or formulate our anticipation or formulate our point of view to certain asset. And again, whatever we're saying here, it's not only applied on Forex, it's applied on crypto, it's applied on indices, metals, whatever. So without further ado, let's get started. Over the past few days and even weeks, we need to understand two concepts in here: the order flow and the trading range. As we mentioned several times before, whenever there's a trading range, price is trying to trade through this range, right? So this is the trading range that the gold dollar formulated, right? And since we are in a downtrend on the higher time frames, so we know whenever there's a reversal, price is trying to trade back to this initial or the beginning of the trading range, right? Okay, so now we know that price is trying to trade back to this level. What we need to understand is the order flow. What's the order flow? Is how market makers are trying to drive the price to specific level. What are the important or specific levels? Again, the areas of liquidity. So please, when we mention like a specific concept or a strategy or whatever, the best approach in here is try to combine as many of concepts together as possible, so it makes sense. So in last video we mentioned about the liquidity pools or liquidity voids. We mentioned about the price delivery conditions. We also had, like I mentioned, about the trading range, and now we're adding an order flow. So how we can understand this? Price traded to this range and completed a reversal pattern. We previously discussed this in previous videos. So now we know that if price is going down, because if we are in downtrend on a higher time frame, this is the next range. So how we can actually influence that price is moving downwards, it's not trying to move upwards anymore. It's the order flow. High pressure sell candles are being delivered after consolidation or retracement period, trying to target liquidity pools. What are the liquidity pools? Places or levels, price levels, where a lot of orders are being placed. So if price is moving upwards, it's gonna try to trade back to this liquidity pools and reject. If price is moving downwards, price is gonna target the previous buy orders which were previously placed at those liquidity pools, take out all of these orders, retrace back to the previous liquidity pools of sell orders that are being placed in that order flow. For example, when we are here, price is making high pressure buy candle, breaking the market structure, placing a lot of buy orders. Retracement, trying to target this liquidity pools, and then rejection. Breaking the market structure, retracement, try to trace this liquidity pools, rejection. Breaking the market structure, a lot of buy orders are being placed. Consolidation, slightly consolidation, rejection, a lot of buy orders are being placed, and so on and so forth. So when price makes a reversal pattern, it creates an order flow in the sell direction with huge sell orders being placed at this level, at this level, this level, this level, so on and so forth. So whenever we're trying to reach the end or the floor of this trading range, we're gonna target the previous buy liquidity orders and reject from previous sell liquidity orders. So high pressure sell candle taking out all of the buyers that were placed at this level. Expansion, retracement to the previous liquidity sell orders. Rejection, taking out of all of those buy orders that are being placed before. Retracement, trying to reach the previous sell orders that are being placed. Rejection, high pressure sell candle, taking out all of the liquidity buy orders that are being placed in this level. Rejection or retracement, trying to reach the previous sell orders. Expansion, breaking this market structure, targeting this buy orders and taking out all of the buyers in the market. Retracement or rejection, trying to approach the sell orders that are being placed at that level, and so on and so forth. Combine this concept to the previous concepts that we previously talked about, which is the liquidity pools, the price delivery conditions. Now we have the trading range and the order flow. Now we have 4 concepts to demonstrate and influence your trading decision, whether it's buy or sell. Now we completed the rejection from this level, right? High pressure buy candle, a lot of buyers trying to trade back. Rejection, breaking this market structure, a lot of buyers trying to trade back, and so on and so forth. So if price is trying to complete this level in a buy direction, we're going to target these levels, right? How we're going to understand? If we continuously breaking market structure in the buy direction, buying orders or a lot of buy orders are being placed, targeting previous sell orders to take out all of these orders from the market, right? So now we have 4 concepts to demonstrate. Go check your chart again, as usual, and let me know down in the comments what you see. Thank you so much for watching and see you in next videos.